morning. Welcome to Business Morning here on Channels Television. I'm Ini John Mekwa. And well, the hottest topic at this time in Nigeria is some hours ago, President Muhammadu Buhari spoke to Nigerians on some of the consequences of the scarcity of Naira, the hardship we Nigerians have had to face over the last couple of days. Well, we'll get to that in a couple of minutes. First of all, let's get to the global space and see what's happening there. The first thing we can tell you is that oil prices rose on Thursday as hopes of a robust fuel demand recovery in top oil consumer China offset losses arising from strength in the greenback and a large build in United States crude inventory. Brent crude futures rose 42 cents to $85.80 a barrel, while U.S. West Texas Intermediate crude futures gained 48 cents to $79.07 a barrel. The International Energy Agency said that oil demand will rise by 2 million barrels a day this year, 2023, and that's up 100,000 barrels a day from last month's forecast to a record of 101.9 million barrels a day, with China making up 900,000 barrels of that increase. China will account for almost half of 2023 oil demand growth after relaxing its COVID-19 curbs. This is the analysis given by traders. Still in the global space now, let's look at commodities. London cocoa is what we start with. The futures on ice rose to their highest in more than 6 years on Wednesday, boosted by tightening supplies, while coffee and sugar prices eased. May London cocoa rose 2.15% to £2,093 a ton after peaking at £2,096. That's the highest level since November 2016. Dealers say that the prospect of a supply deficit in the current 2022-2023 season, which is between October and September, had heightened concerns about tight supplies, with some exporters in Ivory Coast having trouble sourcing beans to honor export contracts. May New York cocoa rose 2.5% to $2,726 a ton, while Ivory Coast January cocoa grind was up 16.5% year on year at 61,386 for a ton. And these exporters are looking forward to the impact of some of this rise and fall in the prices. Well, we'll come back to Nigeria. Yesterday, we did see a lot of protests in different parts of the country, from Oyo State to Edo State. And we saw Nigerians who have taken to the street and stopped others from moving around because they sought to express their frustrations, the inability to access Naira, or when they're asked to pay for even much more than they think they should at POS stands. And obviously this has reached the seat of power. So this morning we had President Muhammadu Buhari speak to Nigerians.
I'm not unaware of the obstacles placed on the path of innocent Nigerians by unscrupulous officials in the banking industry, entrusted with the process of implementation of the new monetary policy. I am deeply pained and sincerely sympathize with you all over these unintended outcomes. To stem this tide, I have directed the CBN to deploy all legitimate resources and legal means to ensure that our citizens are adequately educated on the policy. Enjoy easy access to cash withdrawal through availability of appropriate amount of currency and the ability to make deposits. I have similarly directed the CBN should intensify collaboration with anti-corruption agencies so as to ensure that any institution or persons found to have impeded or sabotaged the implementation should be made to bear the full weight of the law. During the extended phase of the deadline for currency swap, I listened to invaluable pieces of advice from well-meaning citizens and institutions across the nation. I similarly consulted widely with representatives of the state governors as well as the Council of State. Above all, as an administration that respects the rule of law, I have also noted that the subject matter is before the courts of our land and some pronouncements have been made. To further ease the supply pressures, particularly to our citizens, I have given approval to the CBN that the old 200 Naira banknotes be released back into circulation, and that it should also be allowed to circulate as legal tender with the new 200 Naira, 500 Naira, and 1,000 Naira banknotes for 60 days from February 10th, 2023 to April 10th, 2023, when the old 200 Naira notes ceases to be legal tender.
So there you heard it from the President of the Federal Republic of Nigeria, President Muhammadu Buhari, to the old 200 Naira notes is still a legal tender. 500, 1,000 no longer legal tender in Nigeria. The old 200 Naira notes can still be in use until the 10th of April 2023. So the old 200 Naira note will be used along with the new 200 Naira note and the new 500 Naira note and the new 1,000 Naira note. We'll see how far this goes to ease the tension which we already saw from yesterday erupting in different parts of the country where a lot of Nigerians have become too frustrated to hold it in, and so they took to the street. And not encouraging, of course, because when you destroy the banks and destroy the ATMs, you will need them tomorrow. Then where are you going to get the money, the infrastructure to bring it back? I mean, when this is resolved, we do know that it will not continue like this forever. So when this is resolved, then which bank do you hope to use? Which ATM do you hope to use? Where will the money to start getting new ones come from? You know, so I guess this should be at the back of our minds as Nigerians, even though, you know, you do have those frustrations. We cannot access cash. You are limited in one way or the other. It's always better to express our frustrations in peace and not be so violent. But I wonder what this is doing the whole Supreme Court, and now is this one of those policy somersaults they talk about in Nigeria or about Nigeria? Well, let's get a perspective of someone in diaspora who does investing and tries to attract some investors into the country. Kenneth Oguzie is joining us from Canada. He is the Chief Executive Officer of Africa-Canada Trade and Investment Venture. So let's see what's going on in Nigeria through the eyes of someone outside Nigeria, of course, when we talk about investment. Hi, Kenneth. Good morning.
A very good morning to you, Ini. I'm great to be here this morning.
Yeah, so what's the conversation going on around there among the investors you talk to, Nigerians and non-Nigerians? Last time you were in Nigeria, you were in the studio, you know, and you talked about how you're trying to connect both countries, that's Nigeria and Canada, when it comes to investment and trade. How are they seeing all that's happening at this time?
Well, as usual, the whole international community is paying attention to Nigeria. And you know how important Nigeria is in terms of Africa being the largest economy, and of course, what we call the heavyweight. I can tell you for sure the world is, is paying a lot of attention. There's a lot of interest. People are watching, and you know how the political climate is very important for investment. So typically an investor will look into elements of, or factors around economic risk, business risk, and of course the political piece. In this case, the business risk is typically what's, in terms of the organizations or the partners you're working with. But what we really want to focus, it's more of the political risk. So, some of the recent policies around the money, the cashless policies, and, things, how this affects investors being able to, pull out their funds when they need to. But then everyone wants to be sure that if I invest in this country through partnerships or whatever it is, how sure am I that I wouldn't get into some trouble or certain things that would hinder my being able to access my fund or even move my business to the next level. So I can tell you for sure, a lot of people are paying attention. Major political analysts, a lot of people are looking to see what direction is Nigeria going. How is some of these things? How are they going to pan out? And what are some of the ramifications for business and investment as a whole?
Yeah, I think another conversation I was having with someone yesterday was the issue of the judiciary. Because obviously, if you want to bring a business into a country, you also want to be sure that you have the legal backing, and that if anything goes wrong, you can actually run back to the law to protect you and protect whatever agreements you had. Now, when we have the Supreme Court, I mean, we know that the case was adjourned to the 22nd, but we had that order even before now, and we don't know where that order is standing with this 200 naira still being a legal tender and 500 and 1,000 naira, So how do they look at it when we see the law as the backbone, of running of both economic activities and agreements?
Well, of course, for most investors, one of the key things they look into is to understand what are the, legal and institutional frameworks existing in the countries, especially within the auspices of whatever they're doing. And we know how weak institutions has always been sort of the Achilles heel of most of the, developing countries, like we like to call it. So, when some of those news start emanating from the country around the lack of, would I say, lack of transparency or incoherency, or lack of being able to adhere to what the laws prescribes, it becomes worrying for a lot of people. Because when you go into a business contract as an investor, you always want to ensure that all the knots are tight and you have waterproof legal documents. But then typically, you would always want to refer to the courts or whatever institution frameworks exist in that country. But when you start seeing these signs around the fact that, okay, some of these things are not enforceable, or there's a lot of discrepancies in terms of interpretation or whatever, the way the court system works, then it creates a lot of worry for you. But of course, there's a school of thought that would tell you that this is not alien to Nigeria. This has been going on, and investors are still trooping in. I think it just takes a different type of breed of investors, those ones that are more risk averse, those ones less risk averse, those ones that are typically used to, what we might call investing in quote, volatile economies. Because I think the rewards are there. We cannot take that away from anyone. And I think at the end of the day, like what we've seen in countries like Bolivia, where even with all the uprising going on in Bolivia, Indian investors are still going in there to invest in, sectors like the iron ore and all of that. So it just takes a certain type of investors with a certain mindset who typically would always want to go into countries like that. But at the end of the day, I mean, everyone is still hopeful. Everyone is expectant that, we'll get that sort of stability we need. And of course, we would able to sort out and strengthen some of this judicial, institutional, legal framework, as we like to call it.
All right, Kenneth, this is an election year. So can we use that as a platform to convince or, talk to investors to say, oh, all these uncertainties are just because of the election. After the election, will be more stable. Could that be a selling point to investors?
Absolutely, absolutely. As the saying goes, when Nigeria sneezes, Africa catches a cold. And so I think for any investor, serious investor, like I always say, who is interested in Africa, you cannot really, no matter what's going on, you cannot really ignore Nigeria because those are where the opportunities typically will start. And of course, that's pretty much the largest economy on the continent. So I think the message is clear. Elections are always very tricky, especially in the region. Agitation sometimes, tempers are high, and of course, people are using the opportunity. Now, what makes it very interesting with this election is the fact that, you have more younger people being very involved. And you know how we sell Nigeria as, we have a young working population, individuals who are very interested in making the country progress. So the fact that they're interested means that, when it all calms down and everyone is back to the table, you would have all these individuals engaged and ready to move. So the message is clear. It's election period. Some of these things are, I wouldn't say it's uncommon. I mean, of course, it could be better, but at the end of the day, we know how it is. Historically, Nigeria has always been like that, where, sometimes it looks so gloomy and it looks like the whole world is going to fall. But at the end of the day, we find ways to sort of, settle our differences and then carry on with business. But I think the most important thing is the message we're saying is that we are hoping that whoever gets to run Nigeria first for the next 4 years has to be someone who is open to the markets, who would create more market-friendly policies. And I think that's one of the key areas where the investors are keen. I can tell you for sure they have been paying attention to the manifestos of all the candidates because, some of the investors whom we had some interactions and brought to Nigeria in October 2022, they've been coming back to ask us questions around, this candidate is saying this, what does this really mean? And how can this pan out for us in terms of moving forward with our investments?
Yeah, interesting that they're paying attention to that because, I mean, some people have mentioned that I think the top 4 or so candidates are pro-market. So we expect that they do know the importance of the private sector and the importance of FDIs attracting investors into the country. Well, we'll bank on you, Kenneth, to sell Nigeria in spite of what we're having, knowing that it's a phase. We'll grow out of it and get out of it. But thank you so much, Kenneth Oguzie, Chief Executive Officer of Africa Canada Trade and Investment Venture. And you had to wake up I think it's about 4 a.m. there in Canada at this time?
Yes, it's about 5 a.m. Yeah. But when we do international business, you operate on different time zones, so it's not a big deal. But thank you for having me.
Thank you so much for taking time out from your sleep to talk to us. Enjoy the rest of your day.
Fantastic. You too. Thank you.
All right, so do remember, just for emphasis, that the president has said that the old 200 Naira note remains a legal tender until the 10th of April 2023. And if you have 500, 1,000 Naira of the old note, then you would have to take it to the central bank, any of the branches of the central bank for deposit. And when you deposit, you do not expect to get a swap for the new Naira note. It to be paid into an account which you will provide. That's the way it is now. The procedure, of course, is supposed to start before you get to the central bank's office. You're supposed to create a code and, get the code and take it there and stuff like that. So 200 Naira note, old 200 Naira note is still a legal tender. That's the news we got from the President of the Federal Republic of Nigeria. That was from the foreign front with Kenneth. Let's speak to Oluwatomi Mayo, Senior Analyst in Financial Derivatives, on how it is looking from the inside from Nigeria. But let's take a pause. We'll be back. Welcome back. We have Oluwatomi Mayo, Senior Analyst with Financial Derivatives, who's been standing by. Toby, good morning. And I wonder how many 200 Naira, old 200 Naira you have at home. It will become very useful at this time.
Well, I must say I don't have any right now because, we've been expecting something like this. First of all, good morning, Amy. Good to have you. So actually, at the moment, I don't have any old notes. At the moment, you just have to stay by and not allow this kind of thing to just.
You didn't want to be caught up. You didn't know which way it was going.
I just had to just
yes, yeah, and that's part of the uncertainty which a lot of people are talking about in the business community.
So basically, the implication is still there. Although it will help to ease the tension, but the question is by how much. And if I would just give an estimate, let me just start by saying that let's say when the CBN introduced the policy, the Naira redesign, about 3.2 trillion was in circulation, and 3 of the 8 denomination constitute about 90% of the total cash in circulation, which is about 2.9 trillion. And let's say because we were told that 1.9 trillion was taken out, so what is left is about 1 trillion, right? So now that the president has announced that 200 naira can still be is still going to be a legal tender till April. So we'll have about, let's say, roughly 300 billion of that 200 naira notes in circulation. So adding that 300, because the remaining one is no more legal tender, which is the 500 and the 1,000. Adding that 300 billion, and then the 300 billion from the smaller denominations, which is 100 naira, 50 naira, and then the approximately 400 new naira notes that have been printed, we have about a sum of roughly 1 trillion naira in circulation compared to 3.2 trillion that was in circulation before. So that's about a shortfall of 2.2 trillion. And looking at that, that has serious implication. Before the 200 naira notes was announced to continue to be legal tender, we have about a shortfall of about 2.5 trillion, but now it's about 2.2 trillion. So it's not how will I put it? It's not so significant, right? So it's just going to ease the tension a little bit, but it has serious implications for the informal sector and then for the retail sector, which contributes about 30% and 15% respectively to GDP. So one, we're going to see a decline in transaction because the cash usually those sectors I mentioned earlier are largely driven by cash. So, and we're going to see a decline in transactions. And as a result of that, we can also see, because the argument would be that, okay, people shift to online payments. But don't forget that there will be pressure because, there's people are going to start relying on, that platform, and then there'll be pressure, and then we're going to see an increased number of failed transactions. So all of this results in a decline in the velocity of circulation, which means, the number of times money changes and to settle a particular transaction or to produce outputs. So it's just going to lead to a decline in economic activities, the business activities, and then the manufacturer, because of the decline in demand, will have to reduce the rates at which it produces. So it has significant impact, and I hope we don't see a contraction in Q1 and Q2.
Well, talking about contraction, yesterday we had our inflation, and I mean it was even higher than the projection that FDC had, 21.82. Unfortunately for Nigeria, we had Ghana tapering, we have Egypt tapering, we have South Africa yesterday.
Yes, it's defying global trend actually, because in fact Ghana that has always recorded an increase in its inflation rate. For the first time we saw a decline to about 53%. But and we saw South Africa, we saw the US, the UK, about over 60% of the global economy are at the moment they are recording a decline in inflation. But we are seeing Nigeria's inflation. That brings us to the fact that the decline we saw in December was not a trend, right? So because now we are saying, and it's also defined the normal trend, because normally January we see a decline in inflation as a result of reduced activities and all of that. But why are we seeing this actually? It's just because of the increase in transportation costs as a result of the fuel scarcity that that it's harder in January, right? So we are seeing all of that, play into price increase, and then the multiple pricing for, especially increase in domestic prices for food that necessities, food that people cannot do without, which is rice, beans, and all of that. So we saw that increase in many states in Nigeria. So that has been the major stoking factor for inflation.
So this is for January. Now it's February that we have. In February that we have. In February, from the beginning of the month, I think the queues at the filling station are easing a bit now.
Yes.
Even though they're still there. But I think we had the worst of the queues in February. Then of course we have this Naira scarcity. We had the POS charges and all of that. So do you think that the lack of cash, which of course has led to reduction in some economic activities, especially in the informal sector, do you think it will reduce inflation in February?
Yeah, theoretically it should reduce inflation because definitely an increase in, a decrease in output will lead to a decline in price level. But it's also a question of how the commodities, the necessity of that commodity. Do you understand? I don't know if you get my point. So there will be, once that commodity is very necessary, you cannot do it. You just have to buy them at that moment. So you have to pay for it, and then we see people putting charges on extra charges on that payment, because if they have to take it to the bank, if they have to take me, probably if they are buying with old notes, if you want to buy with old notes, which is not even a legal tender again, and then you don't have a choice or something, you have to pay more to be able to, so that they can just be able to take the money to the CBN or something. And then because it's hard to get cash now, if you are going to do transfer, you just have to pay extra money in order to get that. So people are going to price in those things into their goods, especially for necessities. So that can lead to increase in prices in the short term, anyways, and then the increase in transportation costs too. But I'm talking about goods that that the demand will still remain irrespective of what happens.
But election is next weekend, so we're getting close to the mark, and hopefully, after the presidential election and the national ones, we'll have a little bit of ease. Do you see things maybe stabilizing and giving us a little bit of normalcy even before the 11th of March election?
Well, it's reality. That's what I'm going to say. People are going to be faced with reality, because even though our minds, there can be ease in tension, should I say in the mind, sort of, because if there's no cash, the tension still continues. If you cannot withdraw from the ATM, if you cannot, the queues at the ATM is still long, and then there are no access to, or probably there's a delay in transaction being settled. So all of that will still cause that tension in the air, even though, yes, we know that, okay, things are going to get better in the second half of because that's when the handing over is going to be. So, but because the cash will still be scarce, all of those things will still play in, and then cost of transportation will still be high. So all of that would, to some extent, still keep pressures elevated at the moment. So it's a matter of reality, but it's going to give us a better hope. At least we know that suffering now, and we don't suffer next
Okay,
time.
let's hope so. Let's hope that we are paying for an easier tomorrow. But take us through what's going on in the commodity space. How's it looking there?
So for investors are actually, they're maintaining a positive sentiment. Why? Because of the China reopening of its economy, which is going to be a long-term view for the oil price. So we're going to see investors, we're going to see a positive sentiment in the market, in the oil market. Although we'll see that the war in Ukraine, the Russia-Ukraine war might not, have so much impact as it had last year, because you could see the US coming in to, intervene in the market by increasing supply and all of that. So that would help to keep a flow. That would help to, keep a check on oil price. And so we're not going to see that. We might not see that increase to about $100 per barrel, in the long term, except if there's another serious problem. So then for gas, for oil, for gas, natural gas, winter is over, and then it's for the predictions that the UK is going to go into recession as a result of the increase in, Russia's weaponization of gas to the EU has subsided. Why? Because the European countries are now getting their gas from alternative sources, and then the winter is over already. So we might not see gas price increase so much as it did last year in the long term. So that's what we're going to see.
All right, Oluwatomi Maiwa, thank you so much, Senior Analyst with Financial Derivatives Company, for your time this morning.
Thank you very much, Ian.
Welcome back. Still watching Business Morning here on Channels Television. The President, Muhammad Buhari, has certainly been very busy. So apart from speaking to Nigerians this morning, he's been signing a couple of bills. One of that is the Business Facilitation Bill 2022, as also known as the Omnibus Bill. It's now a law, and it is to provide an enabling environment for small, micro, small, and medium enterprises. Now let's speak to a member of the technical committee that provided support to the President Enabling Business Council and drove that now law into existence. So we have Mr. Amal Umeike, partner Strain and Bland Partners, joins us virtually from Lekki. Good morning, Mr. Umeike. Thank you for your time this morning. When I saw this news, I was like, so what's new? We have PEBEC, we have ease of doing business. We have a lot of policies, but the business environment still has all those challenges, especially for the MSMEs. So why should we celebrate this felicitation bill or law now?
Thank you very much. Good morning, and thank you for having me. I think, first of all, if it's for us to understand the background to it, right? So this is an act that is actually groundbreaking in Nigeria. This is because it brings together various legislations, right? And then amends them, which provide certain quick wins for the business community. So rather than have a system where you just amend a particular law, amend the probably CAMA or amend the Trademarks Act, for instance, you have a law that brings them all together and then provides an amendment that then provides some level of succor to the business community. Actually, in Africa, I think it started with Mauritius. Mauritius also has a Business Facilitation Act. And what has now happened is that the federal government, through the administration of the President Muhammad Buhari, and actually PBEC, which is headed by the Vice President and anchored by the Enabling Business Secretariat, headed by the Special Advisor to the President on Ease of Doing Business, has been able to say, look, what are those things that when you talk to investors, I was listening to the speaker before who is based in Canada. And so when you talk to investors, what are those issues relating to transparency, issues relating to certainty in terms of timelines? What are those quick wins that if we remove these bureaucratic bottlenecks, if we're able to entrench some level of transparency, if we're able to entrench policies and codify policies that would weed out corruption in the system without touting at the port, that they would give some level of comfort and certainty to investors who would be willing to invest in Nigeria, and also open Nigeria up to more persons coming to do business in Nigeria. And so that is what the act has now achieved, or is seeking to achieve, so to speak. And we're excited about it from an advisor point of view. We also think, talking to businessmen, that provides some level of comfort, which is why the business community is actually excited.
So we know that one of those things when it has to do with government and paperwork and all that is the bureaucracy, administrative bottleneck. How does this deal with it, this facilitation bill?
Okay, yeah. So what the Act actually now does, right, is to streamline issues relating to, for instance, timelines. So when you talk to corporates, when you talk to businesses, one of the things that they will tell you is that, look, you want to get an approval from an MDA, for instance. It takes ages for you to get that approval. There's no certainty as to when you are going to get it. So, number one, it talks about things relating to default approvals. first of all, it says, okay, that you have to now publish some sort of service level agreement, right? What are the requirements by this particular MDAs? What would be the timeline within which you are supposed to give approvals? What are the products and services that you are even delivering as an MDA? And so it brings some level of transparency. Everybody would see that. Right, so that's number one. Then number two is it then goes further to say things relating to timelines. For instance, if you say you are supposed to give an approval within 21 days, for instance, or you are supposed to give an approval within 3 months, for instance, and you don't do that as an MDA, it is deemed that you have given default approval to such a process or to such an application. So what that does is to give some level of certainty to investors or to businesses or to anybody who would be dealing with these MDAs. And then that helps to remove these bureaucratic bottlenecks that you typically experience when you are trying to carry on dealings with these government parastatals. So essentially, on the part of bureaucracy, it more or less automates things. And that's some of the things that we see when we talk to clients, when we talk to businesses. They would want to see some level of efficiency on the part of the bureaucrats. And for us, which is why we're excited about the enactment of the Act, this Act takes a definite stand by saying that, look,
yeah, I think Amal just muted himself and he's trying to.
Sorry.
Are you back? Okay, yeah. Okay, go ahead, please.
So the Act says if you're trying to do some level of approval, and it gives you a particular timeline within which you are supposed to do that, then you must stick to that particular timeline. Otherwise, it will be deemed that you're giving default approval. So that helps in unbottling the bottlenecks that we've been seeing.
Unbottling the bottlenecks. But does it give consequences if there's an error? You know, if an MDA doesn't meet with that timeline, does it state the consequences and the assurance of following through with those consequences?
So in terms of consequences, like I've just said, issues relating to default approval, it's more or less a consequence. So it's saying that if you don't do this, so automatically the person who have done the application would have gotten the approval, right? So that's some level of consequences to this, right? Already, in terms of transparency, in terms of monitoring, there is the Executive Order 001, which was done by the president. And so what the law now does is to codify that. So in terms of consequences, what you see is that it makes this process self-acting in such a manner that if you do not follow through with what you said in your service level agreement, then the businessman, the business owner, the investor who has made these applications would be able to carry on with whatever approvals that they need. It is deemed that you've given them the approvals by default.
All right. Then another issue when people talk about doing business in Nigeria is the issue of corruption. A rating in the last Transparency International wasn't good at all. Does it handle that?
Yes, so that's one key provision that the Act makes. If you look at, let me give you an example. One of the greatest issues when you talk to people who do imports would be touting at the ports, right? That is one big maze, right, when it comes to issues related to corruption. So the Act makes specific provision prohibiting and banning touting, for instance, at the ports. Another thing, and then that's my own personal perspective, and those are some of the contributions that I made when I was on. If you look at issues relating to if you look at issues relating to corruption, and that is one that deals with digitalization, right? I think that if you have a system that is automated, that is digitalized, it reduces the chances of one having to deal with people who are corrupt, individuals who are corrupt. So one of the things that the Act then does is to codify things relating to digitalization and automation of processes. So what that means is that it helps to ensure that those rooms that would give certain bad eggs within the civil service, for instance, to exploit and inject corruption into the system would be blocked with the implementation of digitalization and implementation of automation within the system. So for some of us, we think that those twin provisions, one relating to the ban on touting, and of course, the codification of the Executive Order 001, which has to do with transparency and efficiency in public service delivery. And then on the other hand, you have issues relating to the codification of digitalization and automation of processes, would be the panacea. Of course, these are if implementation is followed through, because it's one thing to make it
I think you just read my mind there, because we do have a lot of policies, we do have a lot of good laws, but when it comes to implementation, it seems we're not seeing much of that. So we'll try and see how we can push for the implementation plan, not just having the president sign it. But thank you so much, Mr. Amala Umeke, Partners Strain and Bland Partners, for your time this morning.
Thank you very much.
All right, so let's move to the market now. Anita Edith walks in now. I think he still has good news from the equities market, yes. But you have, morning, I think, okay, you're looking at the fixed income. Good morning,
Anita. The fixed income markets. That's the morning after our inflation, January inflation, which is the first inflation report for
inflation figures came in the afternoon, so I don't know if markets were able to react to it. I guess today would be a better day to watch out for the reaction of the market to those inflation numbers.
As a matter of fact, the first reaction is from the fixed income markets, and then we will be talking to our analysts who will give us more details about that. But for the equities market and the unlisted securities market, they maintain their uptrend. Okay, so midweek trading at the fixed income market for the bond space is a bearish sentiment. For the FMDQ Securities Exchange, this is how the market was for Wednesday, 26th of April, 2049 paper. It was number one on the list, but not in terms of the number of deals. We had 17 deals there, valued at 18.8 billion naira. Take a look at the 23rd of February, 2028 paper. It had 42 deals worth 56.6 billion naira. Now, just 3 of them were in the most significant, but total number of deals carried out on that segment on the FMDQ exchange was 73, while the value 80.1 billion naira. Let's move over to the Treasury bills market. It's also the same thing. We saw some profit taking on the market, and this is coming a day after, on the day that the National Bureau of Statistics released the January inflation report that shows that Nigeria's inflation had climbed. It had beat the analysts' expectation. Some analysts had projected that it would be about 21.42%, but it came in higher, 21.82%. Now, so this is for the Treasury bills market. The 8th of February 2024 paper, number of deals 3.4 billion naira. Now, for the deals, the cumulative deals there is just 10 at a value of 8 billion naira. Let's move over to the OMO market. The OMO market sentiments there, the average yield there, it had expanded by 75 basis points to 2.9%. What you had there, the only paper traded as of Wednesday was the 7th of March 2023 paper later this year. Total number of deals carried out there, 3, while the value was just 2 billion naira, which is what you see on your board. And let's move over to for the central bank special bills. Well, the 27th of February 2023 paper had quite a massive value staked on it, 93.3 billion naira, while the discount is just 5%. So that's for that market. Now let's talk to Ajibola Ero Phillips, who's a fixed income trader at FBN Quest Merchant Bank, to tell us more about this. Is the morning after the January inflation report was released to us. So Ajibola, can you tell us more about the the impact of this inflation numbers on the fixed income market across all the instruments there? How did it affect investor sentiment?
Good morning. Thank you for having me. It's kind of muted. It's a muted response to the market, to the inflation figures, and largely what's influencing the current market sentiment is just current liquidity. Not much in reaction to the inflation. It's more in tune with what's happening with liquidity in the market, which is, gone from a very, very surplus position last week and prior week, and then we are at a negative position. Well, almost negative position this week, judging by some of the liquidity squeeze and some of the liquidity exit that we've seen in the form of bond auctions and CBN and CR debits that have kind of taken liquidity from the market. So market is right now a bit muted, and then you can see a bit of bearish sentiment and the short end of the curve, both in the treasury bills market and in the short end of the bond market as well. So that's essentially the response that we've seen this morning.
Okay, so now I'm taking a look at my paper here. It tells me that the overnight lending rates had expanded by more than 540 basis points to 11% following settlements of the February FGM bond auction, about 770 billion naira. So now, when you take that into cognizance, is that really encouraging for any investor to be in the bonds market?
It depends on what you want to do. So what we would see, what should typically happen, or what we expect to happen, is yields will go up slightly. But that would typically be in the short end of the curve, because of the fact that at some point, maybe next week, we expect that there will be some inflows into the market, and then we'll get back those bullish sentiment. So this might be a good time for pickup, because there's just there's a liquidity squeeze, and then because of that, yields are inching up slightly across the curve. Well, not across the curve, more like in the short end of the curve. There's a bit of bearish sentiment in there, and we expect that that's going to continue throughout this week, and that's just because we're not expecting any form of liquidity any major liquidity into the market. Also, we have an eye on the FX retail SMS that is scheduled to take place on Friday. That's going to take a bit of liquidity away from the market again. So it's kind of muted across the curve in the bonds market and the trading bill market.
Okay, so thank you so much for your time on our program, Ajibola. That was Ajibola Ero Phillips, FX trader at FBN Quest Merchant Bank. So now let's move over to the equities markets. The equities market, there you can see on the board there, green color. That's what has been sustained for 33 consecutive days. And so far, month to date is 2.4%. It's still unchanged, while year to date is 6.35%. But what you have there in terms of value, 6.81 billion naira is what the market gained. That's another gain added to the previous sessions. Now let's move over to the counters, the sectoral counter. We saw profit taking impact the likes of Dangote Sugar. It impacted many other major components across what you see, the 5 counters there. But we saw Lafarge print a positive number on its counter, as well as some key components of the insurance sector counter. Now let's move over to the volume of activities. It was a dismal, what you can see there, 24.43% decline for the volume of trade carried out in contrast to the previous session. 23.43 for the value, as well as the deals, all in the red. So that's it for that market. Let's move over to the unlisted securities market. It's another bullish sentiment there, 0.01%, in contrast to what you had previously, 0.04%, which is what you see on your board there. Let's move over to the volume of transactions there. It was down 99.70%, almost the same margin for the value, while in terms of the advances there, Geofluids was the lone gainer, and at the same time, the most traded security on the NSD unlisted securities market. So that's it for that market. We will be expecting that most likely this bullish sentiment will continue for all the markets, but for the fixed income market, your guess is as good as mine.
Yeah, but your guess, Sarah Phillips, that they said they were expecting yields to, edged up, so that might change the tide in that market at least.
Yeah, well, with the inflation numbers, and then of course, the election is just about some 9 days away. So it's quite an uncertain environment. So sometimes you may expect this, and then it turns out another way. So.
Yeah, we'll just watch the space and report. Thank you so much, Anita.
Pleasure.
And Anita gives way to the crypto man. Hi, Laddie. Good morning.
market today.
Oh, congratulations. Congratulations. It's nice to see that in Nigeria, at least, we have that equities to fall back on, and then it's spreading to crypto space. So tell me you're out of the neutral territory today,
yes,
laddie.
It's out of, seriously out of neutral.
Oh, seriously? Okay. All right. But I know that the crypto investors and enthusiasts will be looking out to know which way they should take and what are some of those. I had Bitcoin, like for instance, is very bullish this morning, up to about $24,000. And if you missed out that opportunity to do when it was 19, 17, you missed out. But
you've missed
maybe another opportunity will come.
At the end of the day, we always have those pullbacks, but this kind of market, there's a lot of volatility right now. So getting in or out.
The weekends are mostly not. I mean, a lot of pullbacks. Maybe people just take out investment for weekend spending.
Go and splurge a little and spoil yourself a little. And after the show, I'll be getting some 200 Naira notes from you. Thank God for that.
That's if I have.
If you have. All right, we look at the sentiment now. It's greed. Yeah. Seeing investors getting really bullish in this market now. 62 points. We got to neutral for a few days, but now we're back to greed. I was expecting fear will come up at some point, but now we're back on greed, and looks like the market is, riding on strong at this point. Let's look at the market cap. 1.12 trillion, deeper into the $1 trillion level. Up 8.56%. We see volume traded. That's up 25.01%. What we're seeing, buying pressure in the market right now. Bitcoin dominance, that's sitting on 42.65%. Let's look at the price of Bitcoin. $24,693. We did get to that $21,500 support, but big bounce back. If you look at that one-day chart, now we'll see how that big candle, if you look at Bitcoin one-day chart, we'll see how Bitcoin there jumped from that 21,500 support all the way to that 25K level. Yeah, look at the chart there. We'll see it's kind of overbought at this point now. Looking at the stochastic, they jump up there, big massive candle up to 24,000 from that 21,500 support. We'll see if that actually continues going forward. Let's bring in Rume Ofi now, a financial market analyst. Hello, Rume.
Hello, Larry. Good morning.
Good morning, Rume. It's quite an exciting market we're seeing right now, but this is despite all the regulatory tension we're getting from the U.S. Securities and Exchange Commission. They still have issues with crypto platforms, custody. So it's a crackdown on custody platforms at this point, and we still have the stable coin issue with BUSD. So how are we seeing the market so bullish right now?
The market is actually preempting all of the data that are going to come. I am not comfortable. I actually put a tweet out there because all of these influencers on YouTube are already saying, "Oh, we're heading. This is the beginning of the bull run," like the way we saw when Bitcoin was about 68K, that we are going to get to 100K. What is going on in the market is expecting a soft landing from the Fed, and that is not going to be possible because you can see that inflation is still sticky. It just came out about 6.4. The expectation was about 6.2, which shows that the Fed is going to still increase interest rate for a while. But the market is actually not agreeing to all of that. You can see now that Bitcoin has moved above the daily moving average, are also heading towards the weekly. So, but what I advise traders to do is don't FOMO, don't rush to the market. I personally, it's not going to be a popular opinion, but I personally think that this is a relief rally that will not last for a very long time. We're still going to see the downside. I don't have crystal ball right now, but we're still going to see the downside. So please, people should be very, very, very careful. And all of the crackdowns going on, it's a way for the SEC to come up with a some kind of clarity for the space, because we've seen a lot of things happen in the space. People's money has actually gone away with certain decisions they made. So the SEC is coming up really strict concerning custodial wallets and stuff and platforms that help you keep your money. So when they go bankrupt or when the business goes down, people can actually have something to leverage on. Some clarity in the regulation. But it sounds a bit tough for the players, though. But it's a step for me in the right direction.
Right, Rome. Everyone looking for clarity right now from regulators at this time. Thank you so much. We'll keep tracking the market to see if this bullish run actually continues. Thank you, Rome.
Thank you very much, Ladi.
Yeah. So we see Ethereum is also not left out with this run there, $1,693. So it's a really bullish market, but there's still caution.
But Ruma is telling you be cautious.
Yeah, don't throw caution to the wind.
Into the wind, because you may not get it easily.
Exactly.
Thank you so much, Ladi. We'll see you at 1:30 for Business Incorporated. So that's it on the show this morning. Thank you so much for being a part of it. Do remember now, you can use that 200 Naira, and then if you still have the 500 and 1,000 Naira, head to the CBN office and deposit there to be credited to your account. But most importantly, let's not get violent. If we do break up those ATMs, we will need them after this time. So let's not get violent. Let's, express our frustrations, but not violently. I'm Ini John McQuarrie. I'll see you tomorrow.